The idea is digital money, high-powered money based on Bitcoin. That's the idea, not my idea, right? I mean, it popped up many years ago in the Bitcoin community. So if you want to create high-powered money, you need to strip the vol and you need to integrate it into the currency system of the world. And so I think it's a simple three-step process. You start with digital capital, you layer on digital credit, and then a third party, a bank or a money manager, actively manages it and then puts the regulatory approval on it and then markets it and brands it to create digital money. Vanguard can create it, BlackRock can create it, Emirates Bank can create it, Deutsche Bank can create it, Morgan Stanley can create it, JP Morgan can create it. Do you not agree with me that those are all much better brands with much better distribution, with much better platforms than my company?
Yeah.
Right. So a successful business strategy is not compete with everybody and be intentionally, obnoxious. Like, we don't need to topple the United States government. We don't need to topple the banking system. We don't need to topple the dollar. We don't need to topple the credit market. We don't need to topple the commercial banks, the investment banks. We don't need to replace any of them. What we need to do is figure out how to make them successful and make them the best version of themselves. The ideal product, digital credit is the feedstock to the entire, the entire banking system. In fact, if you create digital money, not only do you take all the bank deposits, you take all the treasury credit, you take all the repos, you take all the short-dated instruments, but if you look at everyone that bought junk bonds, corporate bonds, mortgage-backed securities, 5-year bonds, 10-year bonds, sovereign debt, municipal bonds, why did they not just put their money in a money market? The answer is they were reaching for yield or a tax advantage, right? How big is that? $300 trillion, maybe more. Okay, how much of that capital would simply go to a bank account that paid, by the way, all that capital blended in dollars yields 5%, all of it. And what do? You take on duration risk and you take on credit risk to get the 5%. If you don't want that, you're ripped back to 3% or 2% or whatever the number is. So I offer a bank and I offer you 7%. How much of the 300 trillion would go to that? No duration risk, no credit risk.
All of it.
All of it. All of it. Okay. Now here's the issue. How do you create digital money? Well, to create digital money, you need to take digital credit, blend it with a little bit of currency so you have a liquidity buffer, maybe put on a reserve on top of it for a volatility buffer. Then you need to get a regulatory stamp of approval, right? You need a banking regulator to say you can offer the account, or you need a securities regulator to say, okay, you can offer this as an ETF. Or you can offer that, or you can offer this as a private fund, or you need a digital assets regulator to say you can offer this as a digital stablecoin. Okay. So you put the regulatory stamp on it, you put the buffer on it, you do some active management for redemption. People want daily redemptions and they want it to hold stable NAV. And so we can't necessarily do that. Like, I can't give you a regulated bank account in the UAE because, Mike, are you going to start a bank in the UAE? No. Like I can't. Why would I do that, right? They can do that. Am I going to start a bank to compete with Morgan Stanley? Well, I think like in 1860, right? Morgan Stanley got started. They were financing the Civil War, okay? Right? And so the point is, why do I want to compete with JP Morgan or Morgan Stanley? I don't want to. I don't want to compete with Fab or Emirates Bank or Barclays Bank. I don't need to.
Yeah.
Right? Because if you want to create digital money, you need digital credit, STRC. Okay? How many banks are there in the world?
Thousands.
Tens of thousands. There's 5,000 banks in the U.S. Must be tens of thousands of banks. So there's no shortage of banks with sales forces and good relationships with the regulators, right? There's a bank in Japan that gets along well with, you know, the Japanese regulators. Do I want to go to Japan and start the world's biggest bank in Japan? Of course not. Do I want to start the world's biggest bank in Germany? Of course not. Do I want to be Deutsche Bank? Do I want to be, you know, the biggest bank in Switzerland? Of course not. Like, if you've created the world's greatest product, and if you have a vision for a digital transformation of the monetary system of the world and the banking system of the world and the credit markets of the world, if that vision is digital credit built on digital capital, then why wouldn't you focus on that?
Mm-hmm.
Everything else is a dilutive distraction, right? Right, like you have the world's greatest product. You can either sell $1 trillion of it, or you can go find the next thing. You understand that your odds of actually succeeding at the first thing go down exponentially if you come up with a second idea.
Mm.
When you split to 3, 4 ideas, your odds of succeeding fall exponentially. And so it's not a good idea to get distracted. It's also, by the way, it's not a good idea to compete with your customer. If I'm actually knocking on the door of JP Morgan and First Bank of Abu Dhabi and Emirates Bank and Morgan Stanley and Citi and Bank of America and BlackRock and Vanguard, and I'm offering them digital money, and this is the point of Bitcoin, which is you don't, by the way, I don't show up and say, guess what? I invented something smarter than what you have, and you're stupid and I'm smart, and we're going to crush you to death because you're stupid and we're better, right? Don't show up with that pitch. Or you know, you have this business, you have a bank, but it's a 20th century bank and it's going to zero. So what you ought to do is just sell your stock in that bank and buy the stock in my digital bank, which is 21st century. There's no reason to be confrontational and negative. Why don't you be inclusive mm-hmm. and aspirational? Let everyone else win with you. Right? And that's my view with Bitcoin all the way forward. Bitcoin is for everybody. Everybody is better with Bitcoin. The government, the corporation, the people richer than you, people more powerful than you, people more famous than you, mm-hmm. right? People that have politics you disagree with, they can all embrace Bitcoin and they will all benefit from it and you will benefit from it, right? That's at the base layer. That's digital capital. With digital credit, you know, we're creating digital credit. Am I worried that someone else might copy it? No, because if 100 companies copy it and they also issue digital credit, that will accelerate the transformation of the credit markets and we all win together, right? They're actually helping, we're helping each other. That's a good thing too. Mm-hmm. Embrace that. And then when you go to see the customer, right, the small idea is we have a great product, you should buy our equity. The bigger idea is we have a great product. You should buy the product to make your life better. But the greatest idea is we have a digital credit product. You can actually build it into your financial product, build it into your bank, build it into your future, and you can have the greatest product in the world, and you can be the greatest company in the world, and you can be the most powerful nation in the world. Empower others, right? Empower others by allowing them to be part of your future. And you can see, if you want Bitcoin, right, what is hyper-Bitcoinization? Hyper-Bitcoinization is not all the governments and the banks and the corporations all go away.
Yes, they all have Bitcoin.
Like next time you sit in a dentist chair and you look up and imagine all the governments and all the corporations went away, and then imagine the guy that manufactures the Novocaine and the drill bit, you know, and the x-ray machine also went away. And then think about how they deal with your toothache. The point is, the future is not corporations and governments go away and banks go away. The future is not currencies like the dollar go away. The future is we embrace Bitcoin as digital capital. We rebuild the entire economy with that as the base layer. Then we create products on top of it, whether it's digital insurance or digital credit or digital banking or digital derivatives. And I am not the expert in digital banking, digital derivatives, or digital insurance, nor am I going to purport to be. I'm just going to focus on digital credit. And I'm not even the expert in digital credit because there's 100 flavors of digital credit. I'm just going to focus upon the digital credit that we focused on and digital treasury credit. And what I would say is that if you actually take that credit and then you synchronize it with the dollar and the yen and the euro and the real and the pound, you synchronize the digital credit with the currency systems of the world, and you're synchronizing it with the $300 trillion credit market, then that becomes the base layer for a new type of digital money. And high-powered money is the yen yielding 6%, the pound yielding 8%, the dollar yielding 8%, the euro yielding whatever it yields. Whatever the currency frame of reference is, wherever your liabilities are, I'm going to give you that with no currency risk, but with a risk-free rate, ideally which exceeds the inflation rate of that currency, right?
Mm-hmm.
Right? If the dollar's expanding at 8% and I can give you digital money that yields 8% tax deferred, then I just gave you a completely stable instrument that lets you keep up with inflation. And then you don't got to complain that you bought Bitcoin at the all-time high 94 days ago and now it's traded down, or you bought whatever stock, some Bitcoin treasury company 3 months ago and it traded down. It's like, I mean, the truth is, when you buy Bitcoin, you're a capital investor. You got to have a 4-year time horizon. When you buy equity, you're an equity investor. You got to have a 4-year time horizon, and you take equity risk, right? It's like, if you don't want to take risk and you don't want to take duration, you don't want credit risk, you don't want duration risk, you don't want equity risk, you want money.
Mm-hmm.
Who do you want it from? You want it from a too big to fail bank. So what is the future? Right? The brilliant future is the 200 biggest banks in the world offer digital money accounts that pay double what traditional money markets pay, and 10 or 20% of the money in the world flows into those bank accounts, maybe 30, maybe 40, maybe 50. Remember what I said, though? It took 30 years for 75% of the people to agree that electricity made sense. How long did it take any rational thinker?